Welcome to Smart Investing Market Insights on today's financialnews.com. I'm Krista Das. The state of the U.S. economy has been a source of much controversy. Are we in a recession or are we not in a recession? Could we actually be slipping into a depression? Just how bad are things going to get? And when are the mass layoffs, the continued devaluation of the dollar, and poor stock performance going to end? Joining me now is someone who has avoided the Wall Street herd mentality for years, buying housing before the 2004 rise and shorting subprime and big housing names before the 2007 fall. Ian Cooper is the editor of Pure Energy Trader and SC Trading Pit. Ian, welcome to the program.
Hey, Krista, thanks for having me.
So tell us, many experts won't say that we're in a recession because technically we have not had 2 consecutive quarters of negative growth, but you disagree. What's your reasoning?
Listen, anyone that tells you we're not in a recession shouldn't be giving investment advice. You know, in the last recession, we had 1 quarter of negative GDP growth. This quarter, we may not have 1. Greenspan just admitted we're in 1 after telling us there's a 50% chance of 1. Buffett thinks we're in 1. The Caterpillar CEO thinks we're in 1, as is Jamie Dimon. Listen, it's tough to discount a recession when consumers are shrinking, production is easing, record numbers of Americans are receiving food stamps, when the average number of Americans filing for unemployment hits a 2-year high, when construction falls for the 5th straight month, when manufacturing drops, when consumer spending is flat when inflation is removed, and when payrolls put in a 3rd month of declines. Even the Chicago Fed National Activity Index sank. Listen, we're knee-deep in a recession and have been for months. I don't care what the talking heads would have Americans believe, we're already there.
Do you think that the Fed is finished cutting interest rates?
No, we have a reactive Fed. Some bigwig has gas on Wall Street and the Fed is there to bail them out. But with the current fiscal stimulus set to mail in May, coupled with economic contraction, we'll see more cuts, but not of the caliber we've already seen.
It's difficult to find a place to invest your money these days. If stock performance is going to continue this downward spiral, where should we turn?
Well, with the Fed expected to cut rates again, we'll have a weaker dollar, which will support higher priced gold. Plus, we're likely to see a steady migration towards the safe havens of gold, given a recession that Greenspan just admitted to.
What makes investing in gold and mining stocks so profitable?
Well, it'll take more than news that the IMF plans to sell gold to bring down the price of gold. Yeah, the IMF wants to sell 12% of its gold reserve and help make up for the $140 million budget shortfall. But demand for gold is strong, and it's not as if the IMF would dump all that gold supply in the market at once. It'll be more gradual. With tight supply and heavy demand, jewelers and investors alike will be lined up to take it off IMF hands. Gold mine production is failing to keep up with demand. It's all part of the reason gold prices have quadrupled in 7 years. Consider this if you're hesitant buying gold. Global gold production fell to 10-year lows in 2007. We're likely to see even more declines this year. All the while, petrodollars are buying up gold. Middle East demand, for example, is up 30%. You know, take that into consideration and buy more gold here. You know, we could see $1,000 to $1,200 gold by the end of the year.
Ian, good information. Thanks for joining us today.
Thanks for having me.
If you would like to learn of other places to invest following Ian's fundamental and technical analysis principles, you can do so by clicking on the screen or go to todaysfinancialnews.com. That's all for today. Until next time, here's to great profits from smart investing.
Prices could realistically sit as high as $73 or $74 per barrel this summer.